Amidst a backdrop of soaring prices, Tesla emerges as the beacon of affordability. Analyst Dan Ives unveils Tesla's audacious move to slash prices across the board, igniting a price revolution in the EV landscape.
Demand to the situation where they are right now.
Yeah,
what happened?
Look, demand definitely softened. We've seen that in China in terms of essentially a price war that's happened in China. But I believe the poker move of cutting prices, that was the right thing. I think we've seen it in the stock in terms of stimulating demand for Tesla. But no doubt, they are definitely going through a transition in terms of what we're seeing with demand in the U.S. globally. But if you look at scale and where we believe they could get to production, we're going to be looking at next year or two a company that's going to be 2.5 million, ultimately in the 3 million. What they're going to see from a delivery as well as a production. I think this is just, Tyler, in my opinion, this is just what I'll call the middle phases of the next phase of the Tesla growth story.
Tesla is one of the biggest, greatest artificial intelligence plays there is. The computing power that they're amassing, the data that they're amassing, pretty much unrivaled among certainly any automotive companies. It could be unrivaled across the world, except for maybe Microsoft and Google.
Dan Ives has just revealed that Tesla will be slashing prices by a whopping 20% on all EVs by 2025. Ives emphasized that Tesla's price reductions are a part of a deliberate strategy to expand its market share and broaden its customer base. Tesla has been in the news lately because of its demand and decision to keep cutting prices. The automaker has lowered prices of some of its models across multiple markets, and some analysts believe that this may not be a very good idea. However, investor Dan Ives, a Tesla bull, claims that unlike what these analysts fear, Tesla's decision to cut prices is the right move, drawing in enough demand towards its cars. He also predicts that Tesla cars could be a much cheaper proposition than they currently are by 2025. In today's video, we're going to discover why Dan Ives made this prediction, and how he expects Tesla to pull it off. So watch this video until the end, because we've got a lot to share with you. Let's get started.
We've got the base Model 3 sedan now is at $39,000 or under $39,000, which is $9,000 less than the average car purchase price in the United States, and right there with a Toyota Corolla in terms of, from a competitive standpoint. All of a sudden, what, 4 or 5 years ago was a luxury kind of neat to have gimmicky type of thing to own a Tesla, and it was very expensive, is now right there on par with buying a Toyota Corolla. And who would have thought that we could get there? You can see the drastic price cuts that Tesla has been able to put out there really matches up really nicely with the cost of ownership. Interest rates have gone up considerably, so leasing or purchasing a car on a loan has gotten significantly more expensive. And so what Tesla has done is combated that through price cuts, and I think they're going to be able to maintain their margins while they do that. And the response from the consumer that we've seen to these price cuts has been extraordinary. Web visits to Tesla.com are up 59% year over year to all-time highs. This is a massive, massive move from a company that gets most of its purchases through online channels, especially Tesla.com. So seeing those web visits at all-time highs in reaction to these price cuts tells us Tesla is creating basically a one-horse race and expanding the lead in the EV market, and now is just becoming a matter of time, we think, before it's just the dominant automotive company, period.
By making their vehicles more affordable, Tesla aims to attract a wider range of consumers, including those who were previously on the fence about purchasing an EV. Also, lowering prices allows Tesla to maintain a competitive edge in the fiercely competitive EV market. By staying ahead of the curve and offering competitive prices, Tesla can position itself better against other automakers in the space. But how far can Tesla go with lowered car prices? And what will the long-term effects be on its profit margin? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Ives underscores Tesla's achievement in cost efficiencies and economies of scale as critical factors enabling the company to reduce prices. As Tesla continues to enhance its production processes and scale up operations, it can bring down the cost per unit of manufacturing, enabling the automaker to pass these savings on to consumers. During the conference that followed the publication of Tesla's financial results for the third quarter of 2022, Elon Musk reiterated Tesla's plan to produce cheaper cars. And in a previous interview, the Tesla CEO claimed that Tesla is looking to make a lower-priced car. Based on previous sentiments, this will likely be a China-designed $20,000 to $35,000 smaller EV vehicle, which will be based on a new platform in the next generation of electric cars. It's going to reduce production costs and make electric cars cheaper. So what will this mean for Tesla? Keep watching to find out. But before we carry on though, if you're liking this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla is one of the leading EV makers in the world, and it's got a mission to accelerate the transition towards sustainable energy. However, the automaker faces several challenges in the EV market, such as increasing competition, supply chain disruptions, regulatory uncertainties, and consumer preferences. To overcome these challenges and boost consumer demand, Tesla adopted a new strategy of cutting prices on some of its popular models, like the Model 3 and Y, in Europe and the US. While this has taken a toll on Tesla's profit margin, according to Dan Ives, there are a few reasons why this is a good idea in the long run. First up, price cuts can help Tesla increase its market share and sales volume in the highly competitive EV market. By lowering the prices of vehicles, Tesla can attract more customers who are looking for affordable and high-quality EVs. In the long run, it's going to help Tesla to expand its customer base to new segments, such as younger and middle-income buyers, who may have previously considered an EV to be too expensive. It will enhance Tesla's brand image and customer loyalty in the EV market, since by offering lower prices to customers, Tesla can demonstrate its commitment to making EVs more accessible and affordable for everyone. Tesla delivered 466,140 cars globally in the second quarter of this year, beating Wall Street estimates. And according to Dan Ives, this record EV delivery number is indicating Tesla's price cuts were a smart poker move and will ultimately silence company bears. You see, price cuts can help Tesla fend off the competition from other automakers like Volkswagen, Ford, and Hyundai, who are launching their own EV models with lower prices and similar features. With price cuts, Tesla can achieve higher utilization of its manufacturing capabilities and even reduce its fixed cost per units. The automaker will lower its inventory and working capital requirements, freeing up more cash for investing in research and development, innovation, and expansion. And to make this more efficient, they will have to produce its lower-cost EV as fast as possible. The goal for this new platform is to reduce the production cost by 50% as compared to a Model 3 or Model Y. The reduction will also include less need for labor and space within the factory facilities. According to Musk, with this new platform, Tesla intends to manufacture a greater number of cars than all other Tesla vehicles together. And this would mean manufacturing more than 1 million EVs a year of its most affordable car, even though at the moment there is no specific date for this to take place. Dan Ives has always been a very strong supporter of Tesla's move to cut prices, and this is not surprising. The benefits of this move are glaring, even though the bears fail to admit it. Price cuts can increase customer satisfaction and retention, as consumers may enjoy the benefits of owning a Tesla vehicle without feeling financially burdened. It will also be beneficial for Tesla in the long run, as it could help the automaker increase the market share and sales volume, improving its profitability and cash flow and enhancing its brand image and customer loyalty in the EV market. Dan Ives remains incredibly bullish on Tesla because, similar to analysts like Cathie Wood, he views the company as a major player in the tech and EV space, as well as the AI space too. According to him, Tesla is a tech company rather than a car company, and it's something huge since the company can make huge profits through the monetization of certain individual and invaluable services. Tesla has a bigger plan, and its latest price cuts are only a part of that strategy to achieve its vision of becoming the world's leading sustainable energy company. But what do you think? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.